Again, it's great to have you on the show today. And if you can just run through the week that has been, of course, the key development at the start of the week was the formalization, if you like, of Nigeria on that JP Morgan Emerging Market Bonds Index. But how has the fixed income market traded since then?
Yeah, good afternoon, Wole. Thanks for having me on the show. Since the beginning of this week, Monday was a holiday. It seems as if prices have been going down and yields going up. Almost like an anticlimax to that October 1st edition date.
Right.
So now you're seeing yields about 13% for those 7 and 10-year bonds that were added to the index, which is a bit higher than it was at the beginning of the week.
Okay, and of course, we did see some activity at the start of the week as well. In the sub-national debt market, we saw Gombe State lead the way, if you like, issuing a bond, 20 billion naira at 15.5%. Your thoughts on the significance of that and what we can expect going forward?
Well, I mean, it's a bond that's been in the works for a while. It just shows that that market is not totally dead. And now that the federal government bond yields have come down substantially, these state bonds are able to come to the market at prices that are still cheaper than their loans, but also at a price that gives investors a good premium over the equivalent FGM bond. So you should expect to see a couple more come before the end of the year. Anywhere between 100 and 200 billion will be raised by year end,
right,
which will make it a record year.
Okay, and of course, some of the suspects are Rivers State or Osun State. But can you just talk to us about some of the challenges some of the issuers may have with respect to how they get these bonds to market? I do know that for the pension funds to participate, there are some criteria that they need to fulfill.
Well, I mean, the issue of the investor pool is slightly different. That issue has always been there, but the two bonds that have closed so far were not pension fund eligible, at least as of the time they closed. And we've done 47 billion this year. So the main challenge is obviously getting all the documentation through. State issuers are not usually as organized as corporate issuers at the start of the process, but they do have to have very high standard to meet in terms of filing with the SEC. So really, the other challenge obviously is running against the clock. Most of the states have December accounts which will expire at December 31st this year.
Right.
So those issues have to close before those accounts expire.
Okay, so they have to close. And of course, so many of those that have closed have been more or less taken up by banks. Gombe State, I imagine, really has been, maybe you can even talk about that, the uptake, the appetite for the Gombe State bond in particular, and how that has played out. We know it's opened and closed at the start of this week.
Well, I mean, if you don't have PFA investors, the next big pool of liquidity in this market is typically banks. You've got some asset managers, some fund managers, some other pools of money. But I mean, what that effectively means is that you do have to price at a level that is attractive to where the money is. And so if a bank can invest in other similar instruments at better yields, it'll be a tough sell. So overall, I mean, at the end of the day, you have to really price appropriately for that point in time. And I think the two bonds, Ondo and Gombe, that have closed so far, were successful in convincing the pools of money out there to move into those bonds.
All right, Egie, thank you so much for joining us. We look forward to speaking to you again sometime soon. Egie Akpata, head of Debt Capital Markets
Thank you.
at UBA.